Hello, everyone, and welcome to this Insurance Institute of London lecture on Reinsurtech. My name is Catrin Shi. I'm the Editor-in-Chief of Insider Publishing Group, and I'm very pleased to be your moderator today. Now, we've all heard lots about the Insurtech market and the evolution of that market and its various ups and downs, but you don't hear so much about Reinsurtech, and that is what we're going to be talking about today. And this is about technology designed to support or maybe even disrupt the current incumbent reinsurance space. So in this webinar, we'll be calling it Reinsurtech, and we'll be having a long and varied discussion with our panelists on what that means. So first of all, what can you expect from this webinar? We've got some CPD slides here for you, which should be on your screen now, to give you an idea of what you can expect from this discussion. Before we start, I will say that we are taking Q&A. Our panelists have very kindly agreed to take your questions. And I will actually try and bring them in throughout the discussion. So please do get them in as soon as they pop into your head. Don't just wait until the end. I will leave a little bit of time at the end as well. I will bring them in as soon as I can. So please get submitting. So I've got an excellent range of panelists here today. And they're going to actually introduce themselves and quickly say how they first became involved in Reinsurtech. So starting to my left.
Hello, everyone. My name is Jared Lee. I'm one of the co-founders and CEO of Supercede, which is a reinsurance technology company. So very prominent discussion and relevant discussion for us. I started my career on the broking side, but very quickly became involved with all the technology that Aon was doing at the time. So really getting exposure to how technology was beginning to have an impact in the future of reinsurance.
Hi, everyone. My name is Colette Karakashian. I'm a product manager at Verisk, and I'm part of the Extreme Event Solutions business unit within Verisk. I've been with Verisk for about 10 years and worked on various kind of Reinsurtech deliverables to the market, including Touchstone Re, and a new product that I'm working on around reinsurance exposure management. And prior to my life within Verisk, I was working for a syndicate as a cat risk analyst.
Last but not least.
Hello, everyone. Hello, Catherine. I'm Julian Victor. I've started my career as a junior underwriter on the London market, then realized very quickly there was a wide space for reinsurance software, mostly for cedants, and we'll come back, I guess, to that today, cedants that are using outdated systems, spreadsheets and stuff like that. So I've been in that space for about 20 years. My company was acquired by Duck Creek about 6 months ago, and I'm overlooking the reinsurance offering of Duck Creek internationally today.
Great. So should we get started? And let's just start very high level and talk about, what is Reinsurtech and why is it less developed than other areas of Insurtech? And Jared, I'm going to start with you.
Perfect. Well, Reinsurtech, I think, is the natural maturation of technology in this space. If, from our perspective, you look at sort of the broader fintech industry, and then that broke out an Insurtech category when insurance became significant in sort of attracting technology. I think you're seeing that same thing happening with reinsurance, where the Insurtech universe is now getting enough technological focus into this subsector of the industry that's commanding a sufficient enough sort of investment in technology adaptations and adoption that it's beginning to create its own category in this space. So I think it's beginning to be big enough now to warrant its own specific category.
Right. And are there structural reasons perhaps in the reinsurance space why perhaps we haven't seen that technology come to the fore?
I mean, I think one of the biggest challenges in the reinsurance space is you're dealing with a much higher volume of data simply because of the nature of the business, and you really need the right type of technology to actually handle the processing of that data from an analytical standpoint, at least. If I think about the analytics perforating the market, you need good ways of transferring data, big data sets, that is, and you also need to have the technology at the other end to actually be able to do something with that data. And I think we're in a position now with a lot of the cloud technology that's actually something that is not only possible, but also possible at a cost that makes sense for reinsurers as well.
Mm-hmm. Judy?
I think there is a big shift in the way insurance companies and reinsurance view technology, and that has been the case for I would say the past 3 or 4 years when it comes to capital requirements. And one of the key things for capital requirement management is actually reinsurance. That's why the focus, I've been there for 20 years. Most of the 2000s were focused on putting an HR system, a policy admin system, a claim system in place. And now we see that focus shifting to put in place tools that will essentially manage the capital requirements much more effectively for insurance companies. And we see the same trends for reinsurers, right? And the reinsurtech industry kind of follows the insurtech industry in that same sense, where all those insurance startups, because that's one part of the insurtech that have been created, do actually need to rely on reinsurance to get their business started much more effectively. Mm-hmm. And we see that this actually fuels part of the reinsurtech as well, investments that have been going on for the past 3 or 4 years.
I was going to say, I think there's, and going back to your background, I think there's also this phase by which you needed the industry to grow to attract entrepreneurs into this space. And entrepreneurs here have to have some sufficient expertise and background, where when you look at the sort of rise of insurtech, it was very much, someone who's, looking to build a company who had a hard time buying car insurance or a hard time with their renter's insurance or similar. And those were very organic in their attraction of young entrepreneurs. But to build technology in this space, you'd have had to have the exposure to the nuance of it, the ability to manage the technical complexity, and then wait for the technology to support that as well. So I think there's an inherent lag in that it needed to sort of build enough of its own size before it could attract people wanting to build software into this space, because it is quite a bit more technical than the sort of innovation you see in the insurtech space specifically.
And I think it makes sense that it's following insurtech, because insurtech was the easier, almost the more obvious place for technology to start processing and building out products that could, facilitate distribution channels and so on. And now on the reinsurance side, folks are looking at the insurtech side and thinking, well, I could see lots of benefits I could get from that if I could just tweak it. And I think, we were having a discussion earlier around you can't just lift and shift what you're doing in insurtech and assume it's going to work for reinsurance. There are very big nuances to reinsurance that mean you have to rethink some of how that works and some of the ways in which policies get, processed and captured and so on.
I mean, the big thing is reinsurance is B2B. A lot of insurtech is B2C focused.
It's a different beast,
completely different. So what parts of the chain is reinsurtech supporting, or perhaps there are multiple parts? I mean, I don't know, maybe Colette, you want to
I mean, at least from my background, on the reinsurance side, analytics has been there for a long time. If you think back to, and I'll focus on cat modeling just simply because that's my background. We've had reinsurance analytics on the cat side for 20 plus years. I think really now we're at a kind of a point at which now we've got to think about how do we take the analytics we've got and really kind of supersize them and bring them into the the 21st century with respect to speed, turnaround, efficiency to market and so on. But a lot of that analytic stuff has been there. It's just about how do you facilitate getting it out into the market as efficiently as possible. From my point of view, data gets distributed to the market, but is it distributed in such a way that it's easier? It's really easy for the person receiving that data to do something with it, and not only do something with it, but do it quickly as well, because we're seeing that the turnaround times is just as important as actually having the data itself, which is where I think the distribution channels become really important, because they can facilitate a lot of the analytics that are there and they're kind of ready and waiting to be distributed to those recipients.
I was going to say, I think I completely agree with you. And I think we sort of look at it where there's a category of understanding what the risk is, right? And the CAT models are a really powerful early example of how do you take this portfolio of risk and understand its impact to a portfolio or similar. I think distribution will always be something that's evolving. And I think you're seeing innovation both within the big broking houses, but also independent firms like ours working to improve distribution. And then stuff that you guys are doing at Duck Creek and Prima before that is then managing and overseeing and tracking what is happening with that. So I think it's impacting the entirety of the chain, but less in a disruptive rip out the status quo and replace with something net new, and more of how do we let the practitioners do their jobs more efficiently, more effectively, and with more accuracy and everything else.
I mean, are there any case studies that any of you can share where you've seen this technology work in action?
No, just to comment quickly on what you said. I mean, you guys are absolutely right. There are two main things in the reinsurtech industry: data and processes. Right? Data is absolutely key. You've got 300 reinsurers, something like that, in the world, and they are basically sitting on a $5 trillion, something like that, data that exists out there, and we're not making the most out of that. And that's one key. And the other one are processes. In 2022, we still have a lot of the insurance industry still, using outdated system spreadsheets to process reinsurance, to process actually this data, which is one key part, which is slowly changing in what we've seen in the recent years, and then there are all the processes, the transaction processes in the middle, like the marketplaces that are being built, the use of blockchain, all these technologies that start to be quite appealing, as you said, for a certain number of key entrepreneurs. Coming back to your questions, I'm not sure I've got actual use case. There are a certain number of things we see on the market. The first one being the number of companies that go into the marketplace part or equipment in the world. Another one is I used to receive 5 RFPs per year. So we're a bigger company now, but we receive 5 RFPs per month now. So, it's a world that's totally changing. I would say makes a good example of what we see happening at the moment.
Mm-hmm.
We did some internal surveying of clients and prospects of ours, and we're finding that using technology, the ability for them to shave up to 80% off the time it takes to prepare the outwards data that they need to take into the market. And not only that, but then the feedback from the reinsurers and the brokers as the recipients of that data is vastly positive, because instead of getting the sort of traditional model of spreadsheets with all these different tabs and data sort of buried in all these different places, they're able to sort of ingest it much more quickly in a consistent way that they're familiar with. So even though risks look different, risks are different, the ability to sort of interrogate what they care about within a data set is faster, right? So not only is it easier and faster for those cedents to prepare that data that they need to prepare and take to the market, distribution of that data is easier. The ability for the reinsurers and the brokers to interrogate it and come out with new structures or price a risk, all of those downstream effects begin to become transformed when you sort of have an impact on sort of how you structure and foundationally change the approach by which the data gets prepared.
Mm-hmm. And to pick up on your kind of comment on being able to interrogate the data, particularly downstream of that kind of pricing placement system, one of the trends we've seen when we've been talking to clients in the market about, where are their biggest challenges? It's like, okay, great, I've got this reinsurance portfolio. It's in a range of data formats. How do I, at a given moment in time, or even when an event's happening, which is when people are under the most kind of stress in terms of understanding that portfolio, have everything in a single location, but have it in such a way that I can actually interrogate it and make decisions off the back of that? I think that that's a big challenge for the reinsurance market, and where, technology is needed to actually simply have repositories. And I know a lot of reinsurers are really investing heavily in either building their own repositories or taking vendor repositories that allow them to go not only to kind of a low level of granularity on what that portfolio looks like, but really drill down all the way to even individual locations within those very large, 1 billion, 2 billion location portfolios. So there's such a big importance around not just getting through the placement process, but actually doing something with that data at the end of the placement process as well, to use it for other types of analytics and interrogate those portfolios.
We do have a question from the audience already. So Tom, thank you for your question. Tom asks, should reinsurers and reinsurance brokers be the one to solve the problems the industry faces with their own in-house solutions? What's a crack at that?
Yeah, I don't think the answer is yes. If we look at all industries, including potentially the insurtech industry, we see some of the answers are not provided by the, I would say, historical companies that exist out there. They are provided by entrepreneurs who just see a pain point somewhere, wants to address it, wants to potentially disrupt the way things are being done. 90% of them fail. 10% or maybe 5% of them will succeed in doing something differently. So I think it's more about making sure that you purchase technology, the reinsurers purchase the right technology, potentially encourage entrepreneurs to bring that technology to the market rather than trying to do it themselves, right?
And how much, I mean, we talk about data all the time. Jared and I are on a insurance roundtable every year where everyone says, oh, we could do so much more with tech if the data was there, if we handled the data better. Surely a big, solution, it needs to come from the industry in data standards, the way that it's housed, the way that it's potentially shared before you lift the lid on the potential for reinsurtech. I don't know whether...
Yeah, I completely agree. I think for us, we spend a huge amount of time at the very start of the process with the cedents as they're bringing this data together, because you're right, all of the things that we want to do downstream, all the innovation we'll have on analytics and insights and pricing structures, and all of this is currently kind of trapped, because until the data comes out in a way that can flow downstream in a really efficient way, all of that is sort of left waiting. But there's significant hurdles to be solved in helping that data preparation process get completed, right? And so we spend a huge amount of time improving the speed and accuracy by which cedents can get that data together, because everyone downstream benefits from that. Kind of going back to the question, I think innovation has always been led with the sort of end buyer, right? And even in like fintech and these types of things, companies emerge to make the end experience better for the individual consumer, and then the big incumbent players begin to adapt and adopt to the expectations that are happening there. I think you're going to see something very similar here. We're building solutions that make the lives easier for the end cedents, that then also in turn begin to, you see the big incumbents begin to adapt to lean into those sorts of innovations.
Mm-hmm. I mean, I definitely think the innovation has to be industry-led. You've got to have the buy-in of, frankly, the people who need the products that are being built. I do think there are some pitfalls in every reinsurer trying to tackle this problem themselves. We often see that kind of build versus buy conversation. And, the technology is there, but you do have to invest in a lot of kind of initial work to actually get that technology to do the thing you want it to do, rather than just saying, well, it's technology. That you do have to invest to actually build out the specific use case and then to actually maintain that in-house. And I think the other challenge with building in-house is that you end up with 20 reinsurers with 20 different systems, 20 different distribution channels. Have you really solved problems, or have you just created more channels with which people have to log in and download data and look at placements and so on? So having a consolidated industry view where it's like, this is the process that we kind of as a standard follow, has huge efficiency benefits that you kind of don't get if everyone kind of goes and does what they want to do independently.
Who should drive that consolidated industry view though? Who is that natural? But lots of people point to Lloyd's maybe. Mm-hmm. Lloyd's isn't necessarily relevant to the big four reinsurers, for example, in Europe. So who drives that industry standard, I think, is the big question.
Yeah, it's an important question. I think Lloyd's has a role and has an impact. I think Accord has done some great work historically there. But I think when we look at how we get to a new standard or how we get data that can be accessible by everybody, I think it has to be value-led. Right? And instead of saying, let's first agree the standard and then try to innovate, I think you have to see a natural evolution and a natural introduction of what could be a standard. Ben, one of our co-founders, had a great analogy a long time ago, but it was about the introduction of a brand new like marketing model, right? And if Facebook had come out saying, tell us all the things you care about and who all your friends are and what you like, therefore we can build a massive marketing engine here, people wouldn't have just contributed this, but they built a valuable product up front that you wanted to engage with, you wanted to give your information to because you found value out the back of that then they could then build a model and a structure out of that that was of value. I think we have to think about what we're doing in reinsurance in a similar way. Let's solve actual pain points clients have. Let's help them get data that they care about, they need to get insights from, and solve those problems. And out the back, you're going to get structured data because it's technologically constructed, and therefore people can extract the things that they care about. But if we don't start with solving real problems, we'll get tied up in the weeds of
the politics,
right? And introducing a new standard.
Yeah, sure. So one more question, then I'm going to come back to our conversation. It was only a matter of time before someone asked about blockchain. And Toby asks, blockchain was mentioned briefly. Do any of the panel view blockchain as a viable system for the industry in the future? And what challenges or opportunities do they see in this space? He also asked are any examples out there currently looking at this, and kind of the massive elephant in the room is B3I, right, which was an industry blockchain initiative which didn't work and has been wound down. So I don't know if anyone wants to kick off on that question.
Well, as you said, it's because it's an industry-led initiative, and I'm quite convinced. Again, I mean, whether it's blockchain or something else, the next disruptor in this world probably exists already, but is not someone that is going to be industry-led. That's not someone who is going to be coming from the establishment of standards in this industry, which are incredibly hard to achieve, putting standards out there. And I think blockchain is actually an answer to that, because it's a technology, but it's not a standard in itself. And I think the issue with B3I is they try to make a standard out of a technology, and that simply doesn't work in today's space. I mean, you're never going to put like the 5,000 insurance companies and the 3,000 reinsurers around the table and have them design a standard as such as what we have in a certain number of technology-led activities like HTML or the W3C or that type of things. That's I don't see that happening in the reinsurance industry.
I mean, B3I was there was a lot of excitement around B3I, wasn't it? And it's been a disappointment that it's not worked. I don't know if either of you have any views on how blockchain could work for reinsurance.
I think I kind of agree with your point in that blockchain is a technological option to solving what we need to do within the market, which is have system of records and accountability between parties. So you don't necessarily need to. I think it's misleading perhaps when there's a lot of focus on blockchain itself, when there are a variety of technologies we could use to solve the system of record kind of needs of the market. Blockchain is just one of those options, and it may not be the best suited option for a variety of reasons.
Yeah, I think at the end of the day, we have to start with the problem we're solving, and then choose the technologies that make the most sense for that specific problem. There may very well be times when blockchain becomes the answer, but I don't think that's just yet. And you think about valuable points of blockchain, like solving for trust is a really important one. But in reinsurance, you have these really long trusting relationships with like firms with billions. Like you don't have the trust. So it's looking at what are we solving for and what's the best way to do that, and then only then select the technology required. So.
Okay.
If I take another example of a disruption that has happened over the past 40 years, I'm older than you are, guys. It's exactly like if you said, well, the industry has tried to put the internet in place and it didn't work to exchange information, emails and stuff like that. And when you look at that, blockchain being the equivalent of the internet, for structured information and building, trust in the exchanges, it's pretty much the same thing. It cannot be industry-led if we want that to succeed.
Okay. Another comparison between the reinsurtech and the insurtech space. We haven't seen any full stack carriers come out of the reinsurtech space. Where is the lemonade for reinsurance is going to come in and like disrupt the industry norm? Why do you think we haven't seen that?
I think a lot of it's down to what you were saying. It's relationships. It's people's personal relationships between each other, and there's so much value in that within the reinsurance market that to remove the personable aspect actually kind of changes the market quite fundamentally, rightly or wrongly. I mean, maybe it's time for that to change. And, you know, some of the things you guys are doing with Supercede, like opening up to new markets where maybe you don't actually, the two players have not had that personal relationship in the past, you know, that opens up new opportunities. But I think there's so much ingrained in that, you know, relationship face-to-face stuff that it's difficult to move away from that.
And if you look at Lemonade, there are a particular category of insurtechs because they are actually an insurance company leveraging technology to try to make things differently. I mean, the whole user experience, the way to settle claims, I mean, all these type of things. But when you look at the insurtech industry, and reinsurtech is even more complex in that respect, is before you even find or you even create an insurance company, you've got to put a large amount of capital in there, or otherwise that means you're not an insurtech, you're a distributor and you're just seeing everything away potentially. But you need to put a lot of capital. You've got a huge capital requirement, and the part you'll invest on the technology is going to be minimum compared to this capital requirement that you need to put in place. And for a reinsurance company, it's even bigger, right? I mean, if you want to create a reinsurer today, you need to invest 100 million pounds of capital. You know, the 5-10 million pounds of technology you may want to put there is not going to make a huge difference, you know. So you're not really creating a reinsurtech. You're just creating a new reinsurance company that will have new tools, new technological tools to do business. So that's another reason. It's because the amount of capital is so large that reinsurtech like Lemonade will have a hard time to emerge.
Yeah, I think going back to the earlier definition as well, in much of the insurtech space, there's this direct-to-consumer sort of angle. And you don't really have that in sort of our tripartite cedent broker reinsurer dynamic. So whilst you'll see more of them leverage technology in an efficient and effective way, and you may find some reinsurers who want to invest enough to find an easy way into the market, they'll still need access to distribution. I think the relationship piece that you touched on makes it very unlikely or hard for anyone to be a pure technology reinsurance broker, because the clients care way too much about how they get their deal structured and the relationship they've built over time, and you still then need all the reinsurers to be involved. So the complexity of that dynamic, I think, prevents a singular sort of full stack, because they'd have to identify where that area might exist for them to play and then solve the other challenges that come with being one part of the chain.
We are fast running out of time. So I'm going to come on to like looking forward, and then we'll have some time for questions at the end. So where's Reinsurtech today, 2023? Where do you see it going in the next decade? So pretty big picture thinking here. Victor, I don't know if you want to start.
I think, again, there are two main areas where it's going to evolve. Unlike Lemonade, I don't see it evolving in that space. But again, if I had the idea of making it involving in that space, probably I would go into that business anyway. There are two main areas, as I've said, data and processes. On the processing side, in the next 10 years, I think we're going to see all the insurance companies in the world putting together a centralized system to manage their reinsurance agreements, which they don't have today. That's my space, so I'm quite happy about it. But it's really essential, because right now they don't have the tools to communicate and to manage these essential capital requirements. And the second space is, by putting these tools at the same time, they'll be able to have more electronic the interactions with all the reinsurers. That's going definitely to his placement, to his negotiation, transaction of risk, etc. So that's going to be through marketplaces, through the use of blockchain, potentially technology, and all this type of things. But that's going to help tremendously. And then, as you mentioned before, the other space will be data. Will be around data. Will be around using, actually, one way or another, in a standard or non-standard form. I think it's going to be in a non-standard form, the vast amount of data that we have out there.
Maybe I'll touch on the data aspect. It's more my wheelhouse. Is I think that where we're heading, or where probably the market needs to head, is a shared data exchange platform, somewhere centrally where you can put data if you're sending out and pick up data when you're sending, and then different companies can connect into that through the distribution channels and so on. But having that centralized platform to share the data itself is going to become critical, because that is such a friction point in the exchange of everything within reinsurance. Is you can only get so far before someone says, now you have to go to this FTP and download this and get this password and so on, and that's just an inefficiency that is not only feasible to remove, it just needs the buy-in from the broad market to actually say we do need a centralized data platform that is not owned by any one particular broker, any one particular vendor, any one particular insurer. So for me, that's the big trend, and the big pain point that can be solved in the near term, I would say.
And that would be anonymized data, I'm guessing, and aggregated. So
yeah, something where you can send out your data, you can specify who it's supposed to be sent out to, but you've removed that friction point of having 25 places to log into to find all the data you need for one particular deal.
Yeah. And what about on the modeling front? Are we going to have superstar predictive modeling?
You know what? I think that on the technology piece, I mean, what I'm working on at the moment, the product I'm building is on the AWS cloud, and it's really exciting because the technology there, and I'm not a technologist by any means, but I can see that we can build things that really scale. Maybe 10 years ago, running 100 million locations through a calculation engine would have seemed kind of something that really wasn't achievable for on-premise type technology. And we're now building systems that you throw 100 million locations at it, you throw 250 million locations at it, and the system's smart and it scales. And that excites me a lot, because I can see all the opportunity. If you can build one calculation engine that can do that, you can feed in all sorts of analytical engines into that. And so from the modeling front, I think the cloud technology that's available is super exciting and is going to speed up people's processes. I know that a lot of reinsurers out there feel the pain when they're told to remodel something the 5th time because the terms have changed, etc. Well, if you can do it faster, suddenly that becomes something that you don't even think about. You're like, well, no problem, I'm going to remodel this, a 3rd, 4th time. So for me, that's on the modeling front, the exciting piece.
Good.
I think a 5 to 10 year time horizon is really far in the speed by which technology sort of moves and shifts, and completely agree with both of your points. I think the way we like to look at it is the best way to predict the future of where the space goes is to build it, right? And I think we're leaning heavily into solving real problems and then continuing to iterate on the next problems that exist, right? And if you continue to sort of follow that model, kind of to your exact point, where now my pain point is modeling it the 2nd or 3rd time, but now that I can model it 5 times without blinking an eye, I still have other problems I want to solve for now. Cool. So what are those things? And continuing to iterate on what's next. And I think if we continue to take that approach, I think we'll be incredibly surprised at where we get in 5 years.
Good. Should we take some questions? We've got
Let's do it.
7 minutes. Okay. So Ben asked, I like this, it's quite controversial. Can you explain why spreadsheets aren't the solution for reinsurance?
I'll take a stab at it from a data point of view. So having come from a cat modeling background where I've been deep in spreadsheets, they just don't scale. They don't scale in terms of the amount of data you can work sufficiently in a spreadsheet. It's great for maybe direct. It's great for binder business. Who wants to put a data set for reinsurance in a spreadsheet? I can see once you've done analytics and you've aggregated and you've got some summary data, feeding that into a nice spreadsheet that you can give an underwriter and it's clickable and you can drill in and out, amazing. But I just don't think you can do the actual analytics in a spreadsheet. We're not investing millions of dollars into cloud-based tech insurance if you could do it in a spreadsheet. It's just not feasible. You reach a limit quite quickly.
Any counter opinions there?
Actually, Excel is a great tool to manage reinsurance.
Yeah.
It really is a great tool. But as you said, the biggest issue, or the 2 biggest issues, are scalability and security. I don't know how easy I mean, you've all lost Excel spreadsheets one way or another, and reinsurance is a long tail business. So if you lose and you realize that in 6 months, the Excel spreadsheet of the 1985 underwriting year that you've got somewhere, you're never going to find it, in any way. So that's the security piece. And additionally, I mean, apart from the scalability, the biggest issue, if it doesn't centralize things, it makes things difficult to query. And again, we're in a long-term relationship. Imagine even if you could model your entire reinsurance program into spreadsheet, like on a yearly basis, how are you going to know how much premium you've ceded to Swiss Re over the past 10 years? You've got to pull every spreadsheet over the past 10 years and aggregate this data, assuming it's consistent, which you're not even sure because you'll have different reinsurance technicians going over these spreadsheets one way after another. So that's why it's a great tool, because it's really not expensive in the way you set it up, and it's really efficient, but it lacks security, scalability, and centralization.
Yeah, I also think one of the big challenges is, one, the sort of 1,000,000.1 row limit thing, which always kills everybody. But two, there's this real need now, and I think the more modern way of working is leaning into collaboration, and it's just not a tool that's designed to let parties share a data set and work concurrently on things in the way that a lot of us use other collaboration tools, right? And they need to be designed to let that work happen. And when you look at the sophistication and complexity of work that we do in reinsurance, it just doesn't lend itself to that collaboration piece either. So I think on top of both of your points, there's a world, there still will always be value there. Excel will always exist in these firms, but it might not exist for like the core of their day-to-day for some of these different functions.
Just been told we can go past 45 minutes, so we're going to keep going. Yeah. Livy asks, how is SaaS changing the way the reinsurance industry buys technology versus old school bespoke one-off technology implementations? Anyone have a crack at that?
That has been one of the strongest accelerator we've seen in our space.
Okay.
When you look at an insurance company, like a regular size insurance company, $1 billion of gross written premium, right? There are 3 people operating reinsurance in that space, right? So when they want to implement a system to manage this reinsurance piece, they've got to ask their IT, and their IT has way other issues to take care of that rather than putting a system in place, kind of complex for 3 or 4 or 5 people, and SaaS actually, which is a service, solves that day one, because you can open your service and start, give a couple of weeks, and you can start entering contracts, and you can start putting billing, reinsurance, accounting information in there. You may not have the connectivity with marketplaces as we've discussed, etc., but you can still start operating your business and slowly replacing your spreadsheet. And that's a huge difference with what we had before, when we had to knock onto the IT door of the insurance company and ask whether we could install something there, on which server and then on which virtual machine. But it was always a complex process, not an expensive one, but always a complex process.
Yeah, I completely agree with you. I mean, if I relate this back to kind of products at Verisk that we put in place at reinsurers, actually, 10 years ago, we'd say, okay, you need to procure XYZ servers, all sorts of things to actually put in-house. That could take months, actually, to spin someone up from the point at which the contract's signed to the point at which they're using the product. Now with SaaS solutions, contract signed and you can immediately give them a login and say, you can get going. We've spun you up a tenant, you're all ready to go. That's a complete game changer, especially for startups within the reinsurance space. They can start, doing analytics on day one of writing business rather than having this long drawn out process. I think it changes the dynamics very quickly with SaaS.
Yeah, the speed and efficiency of that, I absolutely agree with. I'd also add the lens of the innovation there. I think, we're all from technology companies. This is all we do, right? So as we get bigger and as we get more clients and as those clients grow, we just continue to make our product better and do more and have more functionality. Like when you're building something in-house, as you said, not only are you fighting for budget and everything else, that company's not leaning into what might you build to make the product better, faster, and And as a result, that this is why we have the sort of legacy problem we have in the industry, is just because the original model of working with it was they'd hire an IT team and they'd build a couple core products in-house, and then they'd let it sit there with the one person in the basement who sort of keeps it taped together, right? Yeah. And when you have the sort of SaaS companies emerging, all those companies focus on is making that product better, on a monthly basis, right? Yeah. So I think that innovation lens allows us to sort of be in a much better spot as we go forward as well.
Yeah. This one is on cyber. So Gavin asks, to what degree can Reinsurtech solve the cyber, I assume, reinsurance capacity gap? Anyone have a go at that one? I mean, this is sort of straying into one of my other beats on insurance and cyber now, but a big problem that the reinsurers have with this is aggregation risk, is understanding what a cat event looks like, etc. And a big challenge is that there just isn't the data for this class to really fully understand the risk. But maybe one of you has another opinion.
It's not that I've got another opinion, but it's what reinsurance is all about. It's going into these unknown and uncharted territories that you may have from time to time on a certain number of lines of business, and trying to learn with a long time in your mind. So of course, it's aggregating risk, it's aggregating information, it's aggregating claims experience, it's making sure that you've got the relevant experts on board. I'm speaking for the reinsurers, but that's exactly what they are here for, right? And in 10 to 15 years, we'll have a better grasp of what those cyber risks are exactly all about, how dangerous they can be, what's the impact on any company. I mean, we've all heard of insurance companies having some cyber problems, or any companies for that matter having cyber issues over the past few years. And that's what I love about reinsurance, because it brings stability in something that is kind of unknown. I'm not sure the answer would be technology, though.
Data, potentially.
Yeah, and I think that's still an issue across many classes. I think property is more evolved because of cat, and it's just very obvious. The house falls down. We can all visualize it. So, but if you look at, for example, data availability in more established classes like liability, you still have a big data challenge there, and that's not a new class of business. So I think that problem kind of is still very broad across the market in terms of how do you manage reinsurance risk outside of the typical, property cat.
Yeah. I mean, this relates to one of the questions that we've had is, until we fix the issues surrounding data quality and availability, surely further innovation becomes difficult. It sounds like from what we've all been talking about, that's sort of a major sticking point.
It's a bit chicken and egg though, isn't it? Because
that's true.
If you offer something that makes, you've got to have some impetus for the data quality upstream to improve, because there's a downstream value of someone saying, I can do more with the analytics if you provide me better data. And it's the other way around of like, why is that person or that entity going to invest in providing better quality data? I think it's definitely a bit chicken and egg there.
Okay, got a fun question to round off. What is the worst example you've seen of unnecessary manual work in the reinsurance industry? Any thoughts?
I'll go first.
Okay.
Worst example, I'm not sure.
There's a few. The one anecdote that I always remember, and podcast listeners might know this one already, but there was times where people who were unfamiliar with how Excel works, which is going to probably table stakes for most of the industry now. But they had a list of signings in Excel, and they would take their calculator and sum up all the Excel cells to just double check that it added up. Because they didn't trust how Excel was supposed to do it, and it was rounding beyond sort of where they had their sort of filter set, or but it's just these little basic things where
this was?
I'm not that old, so let's leave it. we can set it there. So that wasn't probably like 9 years ago. Which is not terribly long ago. So that was a little bit of a redundant one. But then you have, I think, from our perspective, this sort of aggregate rework that gets done, right? So we would put when I was broking, we'd had like 65 markets on a deal, and you send a signing out, but you know that 65 times that number is being recalculated, 66 if you had the cedent, right? So just the sort of aggregate of rework in our space sometimes is shocking.
Yeah, I think to follow on from that example, I always think it's a little bit scary when you kind of open up a new deal and you see you've got 65 pieces of data in individual Excel spreadsheets or different formats and so on, and someone has said that's the data, and you think, well, I don't even know where to start with that. Is this one data set? Is it multiples of the same data set? So I think always that's kind of the scariest in terms of kind of managing reinsurance stuff.
I've got one example from I would say 5 or 6 years ago. We were with a client, and I was looking at some of their claims as part of a scoping phase or something like that. I was asking, what is this? And they told me it was in French, but doesn't matter. It was the equivalent of loss adjustment expenses, right? And I was telling them, why don't you aggregate that to the claim in order to create the UNL before you on a reinsurance treaty, before you subtract the retention, the priority of the contract. And the answer was, oh, we are doing that. And then they looked at the spreadsheet and they realized they weren't doing that. They weren't aggregated. So they weren't actually collecting back from their reinsurance treaties these loss adjustment expenses. And I've did ask, how long have you been doing that? And that was for 10, something like 10 years. So for 10 years, because it wasn't really looked at, they weren't collecting the LAE as part of their, on all the contracts, it was part of the UNL. They weren't collecting that part of the information from the reinsurers. Don't know what they did with that afterwards, whether they did go and collect that information or not, but that's just a simple and kind of silly mistake, really, when you create an Excel spreadsheet and you never really look at that. You don't audit the formulas and stuff like that because, you've got so much information going on. And then suddenly you realize that you've been making a mistake for a certain number of years.
One last quick question from the audience before we need to round up. So we haven't touched on it much, which is why I wanted to bring it in. So Kevin asked, do you see the landscape changing in respect of reinsurance claims management when it comes to Reinsurtech?
On our side, yes, we do. First, whenever our client implement a system, there is a much, I would say, a streamline of information, a much better process between the cedent and the reinsurer to communicate claim and CAT information. The two are a bit different, but they are quite essential for the reinsurer to understand why the CAT is composed of typically. And now we usually have this granular detail where we don't only report the CAT to the reinsurer, but also the underlying claims that belongs to this CAT. So yes, I still feel that there is in the data exchanges between the cedent and the reinsurers a lot that is brought by technology.
Okay. So we're fast coming to the end, but what I do like to do at every panel discussion is to ask each of you to say one takeaway that you'd like the audience to take away from the discussion today. Just going to give you literally 10 seconds to think about that. And we will go to Jared first.
Yeah, I think the takeaway from our side would be to lean into where technology can help you as a reinsurance buyer, as a reinsurance broker, as a reinsurance underwriter. Technology is coming into this space quite quickly now. So looking for solutions that can help the work that you're doing and make your lives a bit easier, hopefully.
Good.
I think my one takeaway is, we need to look at a way that we can kind of reduce the friction in terms of data being passed around the market. I think if we can solve that particular issue, then a lot of the opportunities that technology is going to offer in terms of analytics are going to become, pretty straightforward to implement.
And I think mine would be buy, don't build. It's really important because it's when you buy technology that you'll, put people in pockets, put money in pockets where we will be able to invest even more on solving the pain points that we've discussed today.
Great. Well, at this point, I'd like to say thank you all. Excellent
Thank you.
discussions,
thank you,
absolutely flown
Catherine.
by, and that is a mark of a good panel.
Thanks.
And we'll leave you today. Thank you so much for joining. We've got a slide with key takeaways for you for your CPD. So thanks so much.
Thank you, everyone.
Thank you.
Thank you.